Hello, everybody. Welcome to yet again another episode of Forever Slow Stroking the podcast. It's me, your boy, your man's Eyon. You already know me. You know me. Come on, son. We slow stroking. This is episode 12. I'm happy. Thank you all for staying tuned in with me. You know what I'm saying. This has been a really wild week, and that's exactly what I want to talk about. I just want to talk about what the world happened and how do we move forward. So, let's get to it. You know me. So what happened Thursday, son? First, matter of fact, I don't even want to talk about that yet. Let's go straight for this. This has been the best, wildest week in the stock market for me personally. First, I want to talk about Zoom and DocuSign. Zoom went crazy on Monday. Zoom went crazy. DocuSign went crazy on Tuesday. Like, what the world, son? Like, both of them joints. Both of those companies made millionaires. They literally printed off millionaires this week. And also took some millionaires to some big losers because, peep the hat, slow stroking. You know what I'm saying? More apparel on the way, slow stroking. For everybody on YouTube, check it out. You know what I'm saying? I got the slow stroking gear. You know me. But anyway, so Zoom and DocuSign, son, they went up and they went down. It was crazy, son. I know a lot of people that lost a lot of money. I know a lot of people that made a lot of money. Me personally, I did get in on both of them. Altogether, I made probably like 2,000. I believe, could be off a bit. You know what I'm saying? Could be more, could be less. But of course, I have my profit sheet for y'all that y'all get at the end of the episode. Bet. All right, so let's keep going. Chewy. Chewy. Oh man, I don't know what's wrong with me. So I swear I be geeking too much on this little podcast story. But Chewy, one of my favorites. Chewy is a company. They sell dog food and cat food. Like, they sell pet product and food. You know what I'm saying? Great customer service, everything. They definitely blessed me by running from $60 to like $74. Great, thank you, Chewy. Chewy did go back down, but that's why you got risk mitigation, and you gotta know how to get out. You know what I'm saying? You can't go based off of your emotions and how things look. You gotta go based off of what things are. So now I can talk about Thursday. Now that I got some good news out of the way, I want to talk about Thursday. So what happened Thursday, son? I wish I could give you great detail, but in a bubble, just to be plain with y'all. So Thursday, what happened was the jobless claims came out. And then following that, there was this huge, major sell-off which occurred. And I'm like, son, what is going on? Like, why did this happen? And there's so many questions that I have yet to receive an answer for. But, I mean, it is what it is. Like I tell people, the stock market is it's literally legalized gambling for anybody 18 and over, son. Like, it goes up, it goes down. Sometimes you make money, sometimes you don't. Even the person who's been studying stocks for 20, 30 years, great principles, great, analytics and, experience, still lose. Everybody loses. Everybody wins eventually. The clock, even a broken clock, you know what I'm saying, sees the correct time twice a day. Son, twice a day, even a broken clock will be on the right time. Remember that, son. You might win, you might lose. Sometimes we just never know. You just gotta be strategic and have good strategy and everything like that. But all right, son. So, when the market had this huge sell-off on Thursday, I saw it kind of taking place a little bit Wednesday. But when it happened Thursday and then Friday again, son, I noticed that people panicked. Like, everybody panicked. Like, my mans that just made like 10,000 off of Zoom, 15,000 off of Zoom was like, I'm selling everything. I'm like, oh wow. Like, why are you selling everything? You know what I'm saying? Like, so when I see this, I'm like, this is clearly the lack of, stability. It's a lack of experience, and also it's a result of insider trading. Somebody like, oh, what is insider trading? Insider trading is like this illegal activity where you have people who have, precious and classified information on whatever company, and based off of that information that they have, they sell or they buy early. You know what I'm saying? Like, they'll buy it before anybody else, knows about it, or they'll sell it before anybody else knows the classified information. So that's something to think about. You know what I'm saying? Let me throw the hat back on. All right. So they have something to think about. Man, son, it's crazy with this insider trading because U.S. executives sold 6.7 billion of their own company stock. That tells me that somebody knows something. There's something that we don't know that somebody else knows, son. Like, that's not word on the street, son. That's like, son, I don't even know, my guy. Like, I really don't know, son. Like, but that's insider trading. How do you just determine that, all right, now I'm gonna just sell everything? I'm gonna sell $6.7 billion worth of my own company stock. I'm supposed to trust my company. Obviously, I know something is wrong, so let me sell all of this of my company's, you know what I'm saying, stock or whatever. And then once that happens, and then the bad stuff comes out, then here comes the retail traders. You know what I'm saying? Now we gotta sell. We taking hits because we don't know this stuff. So that's why insider trading is like kind of foul. But yeah, so $6.7 billion dollars in people's own company stocks have been sold. So that's crazy, son. Think about that. And it was a huge sell-off. Everything was down. Everything was down and the VIX was up. That's how I knew it was a huge sell-off. But looking at that, how do we move forward? You know what I'm saying? How could you possibly move forward from something as great as this? You know what I'm saying? And I kind of got some stuff for you. Number one, I think the best thing you could do, if you're a valid trader, son, and you understand, you know what I'm saying, kind of like what's going on, evaluate your portfolio. That's like the most simplest thing you could do. Evaluate your portfolio. Know what's in your portfolio. Look at it. Research it again. And number two, ensure that you are in some quality stocks. Not every stock that's booming is a quality stock. Some stocks are just booming because it's relevant. Get out of those positions. Number one, I'm not saying this, as a financial advisor, because I am not a financial advisor. I am not a fiduciary. If you need one of those, go get one. I am not that person. Everything that I'm saying to you is for entertainment and informational purposes. These are just my own opinions. Do not take what I am saying seriously. You know what I'm saying? But I had to say that. Anyway, so ensure that you are in some quality stocks. You feel me? Like, really make sure that you are in some quality stocks. To give you some example of a quality stock, I would say, all right, let me look. Gold. Gold is a quality stock. That's just one example. Like, gold is a quality stock. Bank of America. Bank of America is a quality stock. I mean, it goes down, but do you really see Bank of America going anywhere? Probably not. No, I don't. So have these quality stocks, you know what I'm saying? Even the low stocks like Ford. Ford is a quality stock, but it's low. But I mean, I don't see Ford really going nowhere. I've seen Ford at like $3 before, but I've never seen Ford at the floor. So that's another one. But get into some quality stocks. The third thing, give a second thought to stay-at-home stocks. And you might be like, all right, Eyon, well, can you, tell me what is a stay-at-home stock? Of course, like, I'm going to give you an example of a general stay-at-home stock. So for me, stay-at-home stocks would include e-commerce. That's that, e-commerce. E-commerce are stay-at-home stocks. If you know that the unemployment rate is down, how could you, if the unemployment rate is like high, like a lot of people are unemployed, how could you expect, you know what I'm saying, for e-commerce stocks to really be up crazy? That might be confusing for some of y'all. You have to factor in two things. Number one, you got to understand, all right, well, are the e-commerce stocks, good? There's several ones like Amazon, Big commerce. Chewy is also an e-commerce stock. Walmart is becoming an e-commerce stock. Is what is it? Overstock is one, but it's like, all right, well, if people are on unemployment, how much are they getting? Is the unemployment, payouts changing? Or are people just saying that, okay, I'm out of work? Or are they really filing for the unemployment, checks? Because I know some people that just don't work and they're not on unemployment. So that's something you also got to think about. You got to look about the jobless. You got to look at the jobless claims, and then you got to look at the unemployment. That's that. And lastly, for this, the main meat of the, episode, pause. I want to talk about Apple. I want to talk about Tesla. Son, Apple dropped. Yes, it did. Tesla dropped. I know why Tesla dropped. Tesla dropped because, number one, the whole market dropped. Everything fell. But Tesla dropped more when they announced on Friday, Friday the 4th, that Tesla will not be getting added to the S&P 500 this time around. That doesn't mean that Tesla won't be added in the future. Me personally, I still believe that Tesla is a buy, especially if it drops. I'm looking at Tesla, below 350. Now, don't take into account what I'm saying. Do your own research, because this might change. This might change on Tuesday for me. I might change that number. It might go up, might go down, son. So really do your own analysis. And that's that, man. That's really all I have for that. That's the episode of It's Been a Wild Week. Now, let's get into some greatness that I, had. So trading goal is always 20% profit on options, 10% profit on shares. For the week of, what is this? Yeah, for the week of September the 4th, 2020. What do we have? All right, so let me go down the list. Right now, I'm seeing a $35 loss on Nervax. That's what that is. I see a $250 loss on Microsoft. Stupid. I saw 100% profit on Ford. Talked about Ford. $900 profit on DocuSign. $300 profit on Avis. What is this? $290 profit on Rocket. $100 profit on Rocket. $2,665 from Chewy. Profit from Chewy. $57 profit from Avis. $705 profit from Chewy, $600 profit from Chewy, $675 profit from Chewy, $58 profit from FedEx, $240 profit from Avis, $110 loss from Neo, and $65 profit from Chewy. Mind you, I did make money off of Zoom last week as well. So I think last week on Zoom, I made a total of like $545. So I did talk to you about me being in the Zoom, so that's that. Hidden gem for this week would be Tesla. I would say Tesla because if it drops low, I still think Tesla's a quality stock. Tesla is the EV that other EVs compete with. They don't compete with each other. You don't see like Lucid competing with Neo. Nah, they compete with Tesla. You know what I'm saying? So look at that joint. Another one I would say is look into some sports betting stocks. That's all I have. Thank you all for tuning in. Don't forget, it's your man, your boy, Eyon, forever SlowStroking. You know me. Son, thank you for listening. And if you need me, you have a question on this episode, feel free to reach out to me. I drop all of the, all of the details in the description of the episode. And please subscribe. If you're not already subscribed, subscribe to my channels. Subscribe to me on YouTube. Subscribe to me on your favorite podcast platform. That's it. All right, son. Peace out. Forever SlowStroking. You know me. Stay blessed and prosperous.